Oh, I gotta get all this set up. I haven't set up anything, so give me a break. I gotta start Active Trader Pro too. Force quit, Active Trader Pro. It'll restart. Good morning. Let's see. It should show me live. Oh, I'm not on my channel. Daily stock picks on the channel. There we go. Let me turn down my volume. Hit the thumbs up button. There's nobody here. I'm talking to myself. Wow. Everything's green. Apple is down a little bit. Google is down a little bit. Moderna is down a little bit. QCLN is down 3%, but that much might be pre-market. It doesn't trade a lot in pre-market. Morning, Brian. Let me get signed in. Morning, Cooper. Your boy here was doing taxes last night. Not a good night for me. Not a good night at all. Don't ask. Hold on. I've got 2, 3, 4, 8. Morning, Joe. What I don't understand is, and I don't get this, I use TurboTax. Fidelity gives me TurboTax. If you are a Fidelity customer and you have a certain amount of money with them, they give you TurboTax for free. I don't know what that money is, but they do give me TurboTax for free. So I sign up, and then there's a self-employment one that's like $120 extra. I mean, TurboTax is the biggest fucking scam. And I like Intuit because they make money. So, my dad owns the stock. I don't feel like I have to own the stock, blah, blah, blah. And if anybody saw, let's see what fucking Kramer was saying. Let's see what his tweets indicate today. Because he tweeted out that, First Republic would be way down. Let's see, has Jim Cramer blocked me yet? I don't think so. I don't think I'm important enough to the investing club. All depositors are fleeing all regional bank. FRC has no reason to guarantee all deposits, and I think you would need congressional approval, offering a better plan on tonight's Mad Money. Oh, so now he's getting involved in banking. Fantastic. Jensen's GTC keynotes are the most thought-provoking. Oh, he's pumping NVIDIA again. Today, all day, we learn about new AI actually is going to work in all of our loves. Today is Jensen Huang's keynote. He doesn't even know to use the $ in front of NVIDIA. Here, this is the tweet that got me. The FRC torture will continue at its regularly scheduled 9:30 hour. Let's go to the videotape. Let's see. FRC. We'll look at FRC. Oh, Jim. It closed at 12. It's at 15. Oh, Jim. Douchebag. Yeah. I mean, inverse Kramer is so perfect. Because he doesn't get it right. And, your boy here. Guess what's up 20% pre-market? FRC. F Jim Cramer. Let's do some scans. I've got... and if you didn't notice, I just posted this in the Facebook group. Remember yesterday, and I was thinking about this after I did it, but God, it was... There's some things that just make sense. And here, let me get back to Safari. This is the chart that I pulled up, and I think I did it in the podcast. I don't know if I did, but this is year-to-date Dow Jones Industrial, S&P, QQQ, and it's updated. S&P is up 3.33. QQQ is up 15.69%. The Dow is down 2.69. Duh. It's got to come back. It's going to come back. The underperformer always kind of, and the overperformer kind of comes down. Either the S&P is going to shoot up here to meet QQQ, or Dow Industrial is going to, QQQ is going to come down to meet the Dow Industrial, but they're all going to meet at some point in time. It can't be outperforming that much. You look at 1 year for the three. Look, they all kind of come together. That's the point, is when there's a divergence, they all come together. Look at the 3 year. They all come together. They all come together. Look at the 5 year. Boom. When there's a divergence, this one comes down to meet those. And look at the S&P. It's just kind of the steady middle. Dow is underperforming. So, what do? Well, UDOW. Because I think the Dow is going to come up. I think the Dow is going to, again, the economy is strong. I got to show your comment, Cooper. DPSD, I haven't looked at it. I got to write that down. Hold on. We're going to look at the banks again. We're going to take a look at all of those. I'm going to add those in my notes. Bum, bum, bum. Pre-market movers. Let's look at this one. Anything good? NVOS. Oh, that's Nova Integrated, not Nova Nordisk. First Republic up 26. Cerbis? CISO? Did they just miss the C in Cisco? Credit Suisse up 3%. Quince Therapeutics up 58. Mullen down 2%. Nothing that I really know perfectly well. Economic calendar, Red Book, existing home sales at 10. Nothing huge. Oh, that's yesterday. Let's renew this. Did anything come up? That's still March 20th. I don't know why. Let's see. Rather screw that. We're going to close that. Bond rates. Let's look at bond rates. Where are we? U.S. Treasury. 2 year, 4.19. That was at 5.3 just, 2 weeks ago? So, morning, Sherry. And Cooper, even in good times, I lose my ass. So, yeah. I mean, look at Devon. I think my average purchase price on Devon is 53. I'm just holding it. I'm going to probably buy more. But let's get into the scanner. Oh, let's see. We're going to scan our brokerage holdings first. Oxy, cross up. Was that today or was that yesterday? I think that was yesterday. Let's look, run. Oh, 4 hour. Oh, that's today. Oxy. Oxy gets a bid. Let's see. Market scanner. VTRS. This is a spinoff of Pfizer. I probably wouldn't recommend it to anybody. I think because I had so much Pfizer, they gave me a couple $100. It was not a bad deal, but okay, let's go to the core portfolio. Core investments is what it's called. Oxy is in there, I'm sure. I need a listener who's a CPA, an aggressive CPA. My taxes suck. I got screwed because I think my tax loss harvesting, and it's not screwed. I mean, listen, I am low income. I live as low income as possible, and I do have healthcare.gov insurance, and I think my tax loss harvesting, which I could have done another $25,000 worth. I didn't do it correctly. I made an error in my calculation, so I missed out on $25,000 of 0% capital gains. That upsets me because the last year I missed the same $25,000 on NXE was yesterday, so I'm not going to bring that up. Hey, you know what? Why not? Energy's a good one. Energy has been just beaten down so much. But this shows you, HIBL, high beta bull, S&P, HIBL, URTY, UMDD, DPST got a cross up. Wow, look at this. It's up 14% in the pre-market. It's at $9.04, Cooper. Wow, James is killing it on this one. Hopefully he still holds it and he didn't pull a boomer trick like me. You got to get out, man. You got to get out. See, so this is the 4-hour chart. So here, let's look at this. On triple levered ETFs, I don't mind using the 4-hour. It's just a little bit slow sometimes. And we got the buy-in at $7.86. Well, if you get back to $7.86 today, great one. But, it's clear. Look at that MACD down there. The RSI is still at 24. It's going to go up. Let's move to the 65-minute because when you essentially move from a 4-hour to a 65-minute, you've got a better trigger. And we talked about yesterday how 1035, I said it's got a buy-in at 885. Well, now you're at 903. So you're up. You're up. You're not 10%. You're not 20%. You're up. It's up 14% in pre-market because it dipped down and it got you out with a 10%. This is what triple levered ETFs do in volatility. You lose a lot of money just like you gain a lot of money. So, Cooperman, high five. Bam. High five on that. That is awesome. So happy for you. You're probably making out way better than FRC. FRC, I think it seemed to put in a base yesterday at 14, and we can look at that one in a little bit. But this DPST, you got a gap up here between 11 and 12. I may take $1,000 and just put it in here. Right now it doesn't. If we open up here, let me see. We're going to add in and it's going to be right on the. I got to get rid of the 9-day. There. So the 8-day is right at 809. So yeah, it's going to open up and we're going to get on the first candle a buy. So if you want to buy DPST, I don't think it's too bad because I do think that you're coming up here to fill this gap. In my mind, I think the problem with First Republic is are they still getting runs? And Jim Cramer seems to think that they're still getting runs. Well, douchebag also, thought that Bitcoin and all that stuff was out. Let me make sure. Let me see what's in here. Levered ETFs. Do I have Gush and Drip? I don't have Gush and Drip. And why don't I have Gush and Drip? And I think the reason I don't have Gush and Drip, it was 2 times, and I think I did the 3 times. This is the index's top 10 holdings, and I saw there was a lot of bad. Some of these companies I'm not a big fan of. Some of them I am a big fan of, and I think I said to myself, it's oil and gas exploration production, 73%. This is Gush. Drip is just the opposite. It's 2 times. let's see. Let's take out. Let's sector equity. There's Nail. There's the home builders. I didn't put all of these in. Like I didn't put. There's Gush and there's Drip. And I don't think I put them all in because I didn't do sector. I did mainly tracking ETFs. Maybe I should put them in. I do have SOXS and SOXL because, again, I know tech. But I didn't put energy. And I do have DRN and DRV for the real estate because I thought that was... I mean, then you got healthcare, financial, Dow Jones Internet, Bear and Bull, discretionary. I'll talk about it. I don't think I'm going to put it in. I'm torn. If you want to check out levered ETFs, by the way, here. And it includes single stocks. Yeah, it pays the dividend. DPST pays dividend here. Let's go. DPST. I think it's what? 4%? I don't know what the payout, when the payout is. It doesn't say here. It doesn't have it here. Let me see. Let me see if Fidelity has it in their description. DPSD ex-dividend date is 3/21. So today. So you got a dividend too, Brandon. If you're holding it, today is the date. So today, as of open today, is the ex-dividend date. So you got a dividend as well. About 1%. So, high five. Boom. Nice job. I wish I would have brought that up to folks, but oh well. I can't be daddy to everybody. I think it says 3/21, so just hold on one second. Dog's crying. What? She took your bed? You're crying? Hold on, I'll get your bed. I'll get another bed. Okay. You can't cry because she takes your bed. You are 30% bigger than she is. You are 30% bigger. Hey, come on. Let's go. There you go. You're 12 pounds. She's only 9. Oh, boy. Okay. Okay, we're going to continue our scans. This is low cost. Oh, wow. I'm not even getting... you know what? I'm going to put these in, but I ain't going to go over them. VEA, VTV, VNQ, VXUS, VYM, VWO, VBK, VB, VO. Okay. Those are low-cost Vanguard ETFs. Let's look at spider sectors. There's got to be some. Oh, none. What? Are you kidding me? Hold on. We are going to look at spider sectors. And I'm going to go to strategy sector, 4-hour. Boom. Spider sectors. Okay, so XLC you're still in. Okay, let me bring this up. XLC. This is free. XLP. Wow. Yeah, but you know what? And it was funny because one of the guys this weekend told me XLE is not. But one of the guys this weekend, he's like, "Yeah, I tuned into your YouTube, man. I couldn't watch it. You were dealing with your microphone the entire time." I'm like, yeah, it takes a certain person to probably not the people I hike with, because they're the people that hang up the phone on me. You guys probably are the best friends that I could have because my other friends are just so disrespectful. And not disrespectful like they don't love me. Just disrespectful and, oh my God, you talk so much. XLB. XLRE or in XLRE. No, you are not. I'm going to post a lot of notes on this one for people to look at. XLK. And I probably should do all this research prior to me coming on YouTube kind of thing. XLU, you're in. XLY. You are in. There's a lot of sectors. I don't drink coffee. I drank coffee while on hiking. And the boys were like, don't drink coffee again. Okay, spider sectors. Let's go down to my own personal watch list, which should have a ton because a lot of them are ARK funds and holdings and things of that sort. But wow, here are the sectors, by the way. If you guys on YouTube want to look something up, those are the sectors that the 4-hour algorithm has you buying in. Like literally you're in. So did it not post? Oh, it did post. It just doesn't come up on my screen. Wow. These are MAR. That's Marriott International. It's a good looking chart. Splunk. Do I want Splunk? No. Airbnb, I do like. Host hotels. That's a good looking chart that might come back. And Boeing. I'm not going to put Boeing. Airbnb I like. Airbnb, I think anything under 150 for Airbnb, it's kind of like Snowflake. You're going to have huge swings in that one. It's just, Let's look at all the ARK funds. And yes, we became best friends. I'll look at TQQQ. You probably, and I think you Brendan, were you the one that asked me, because I posted that QQQ from TrendSpider, which they're saying QQQ could go to 300 if it breaks out. I don't know if today. Here's the thing that you have to know about TQQQ. Remember, it's triple levered. So if you lose 50%, you got to be getting 100% to make it back. So you want to be careful as to how long you hold it. But this is interesting. JD.com. I'm not trusting China at all. Lulu. We had a cross up on Lulu. We talked about that one. Charge point. I don't see anything that I'm in love with. Okay, let's go to the Dow 30. Let's do the big boys. Okay, Boeing's the only one there. I already have that. Let's look at NASDAQ 100. I was shocked that NVIDIA is as high as it is. Oh, God. Look at the NASDAQ, man. MCHP. GILD. I don't like Gilead. I mean, it's healthcare. Dollar Tree, man. You got this big-ass gap up here that was filled before, and then it created again. That's the crazy thing. I mean, literally, if you want to top to Dollar Tree, it's $1.65. Or, I'm sorry, $165. Just sell it $165. I mean, you're at 141 right now. You're going to get to 165, if we go back into a recession and stuff. Let's pull it back, this volume shelf, back to where we have this. Oh, come on. We're going to pull it back to where we have this. Let's see how many people are holding. I'm going to pull back here. We're going to go back to April of last year. Where's everybody holding? Everybody's holding here. So there's a lot of people up here still holding Dollar Tree. I'm going to go core portfolio. I'm not going to bring it up. CSX. If somebody wants to get into railroad. Ross stores. Interesting. When's the last time you were in a Ross store and there was nothing on the floor? If anybody's gone to Ross stores. Fiserv. Interesting chart. It's covered the gap. Is it going back to 118? It's just done. Marriott, JJ, Lulu, and WBD. Let's put Lulu. I'm not going to go over all these charts because I'm trying to keep it to like a half hour. Although the hour-long shows seem to be more listened to. S&P 100, there we go. I don't think it's going to come up. Schwab. Wow. Schwab finally has a cross up here on the 4-hour. And it's trading at 58. Closed at 56. Let me go to the 4-hour. I know we talked about it having a cross up on the 65-minute. Yeah, 57,617. Let's see. BRK.B. Still got this little gap at 291, but Berkshire for me is one of those where I think it's going to get you back in. So my algorithm is, again, focused on the MACD. And the MACD here, you can see it. It's going to cross up, probably going to get you a cross up. For me, I'd try and get it under 300. You're at 301. That's the hard part of this one is you don't want to time it, but you don't want to overpay. Close to 301. You want to buy on a down day. Specifically on stuff like that, you want to buy on a down day. But I like it as an investment. I mean, you can't go wrong with Buffett. Long term. I mean, here. Let's go to a weekly. Because if you go to a weekly, you're fine. I mean, this is COVID. You kind of just had another leg up. Last year, you took a year off. Another leg up. Yeah. I did. And he's changed his stance, I think. It's hard to tell his motivation for things of that sort. because I posted that, that challenge that he did where he said, hey, fund managers, I'll give you $500,000 if you can beat the S&P. And nobody did. And he wound up beating all of them in Berkshire. So I just, it's hard for me to, as a guy who owns the large majority of my stuff in Apple and stuff like that, it's hard for me not to agree with him. But I also know that I spend a shit ton of time managing my portfolio. And not everybody enjoys managing their portfolio. So if you enjoy managing your portfolio, go with single stocks. If you don't enjoy managing your portfolio, go with a S&P tracking fund. I don't think let me put it this way. There will be people who have opinions about things, and yes, Warren Buffett knows better than most about investing. But I think historically, if you're managing your portfolio, do picks. If you're not, Sherry, you and I are the same way. I got, we're retired. I did it even while I was working, but remind you, and so my boss may even be listening, but my ex-boss. But even while I was working 3 hours a day. So I wasn't really working. Let's go back to the market scanner. And we'll go back to this one. And we did the S&P 100. Schwab is the only one. I got Booking. I've got Boeing. Gilead. Do I want Emerson Electric? This is interesting. The chart looks... You just have downward earnings. And we'll bring it up. No, I won't bring it up. I'm not adding it in. Let's go and scan the energy sector. Because energy had a good day. So maybe we've got some well-known companies that are going to show up. TPL. Don't even know. Pacific Land. Good looking chart. It's $1,000. I mean, just buy fractional shares though. MV Oil Trust. Magnolia. I like them. Energy. Empire Petroleum. EPINT. That's an interesting chart, but reducing earnings. CNX. Nope. EQT we've talked about before. They're having some cost problems. Oxy, PBT, which is the Permian Basin. BORR is up 6.53% in the pre-market. Board drilling. It's got an interesting cross up here. It's coming after a big drop. Let's see. BORR. No dividend. Forward PE is 8.83. It's up 38%. 1 year, it's up 122%. BTG Research neutral to buy. Board drilling, increase in share capital. Nothing recently driving it up. I don't see any insider. Yeah. Brandon, it's fun. Sherry and I can tell you it's fun. Anybody that has any interest in this stuff, it's a good world. I enjoy these things. I don't think I'm going to bring up. We have Viper. Viper has just been in a downward spiral. They have a good. I think this is the one that I'm going to bring up in the energy. Energy is just, if we're heading into a recession and things are going shitty, you're going to be in trouble in energy. So even 1 year, Viper Energy is down 7%. Performance year to date down 13%. Their PE is 13. That's expensive for an energy company. So it's hard to, bring that up as a, ooh, you got to buy this one. Okay, let's go. Viper, Venom. Yeah, I always say Venom. VNOM. Why the hell did you, make your symbol basically Venom? Okay, here's your exclusive look at QQQ. Because this drives TQQQ. I mean, I can look at TQQQ, but might as well just look at QQQ. Here's where I'm a little bit skeptical. So 294 was the buy-in, which you're doing really well on if you got TQQQ at that point. The RSI is at 63. Your MACD is really kind of moving up while the strike line's moving up. If this were to get to this 71 level up here, 7.1 level, I'd get nervous. I mean, here's the good news is, and when you talk about divergences, you can see it hit that high mark, and then it just crashed down. Well, the stock didn't crash down. It did, 3%, 4%, somewhere in that neighborhood. But look at that run up. I mean, it gradually went up. Meanwhile, this thing just shot up. If we look at a daily of this, you just had the golden cross on QQQ. March 13th last week. So is it time for TQQQ? I think I mentioned this last week that TQQQ, I think this was one that I said, hey, you should buy into it. Because we had a cross up at 22.17 on March 15th. Wasn't that? I think that's the day I left for vacation. I mean, this is on a 4 hours. So there's two. There's a morning and an afternoon. But the RSI is at 63. I'd be slightly scared, but in pre-market, it's up 1.89. So Meta is just one. God, by the way, Meta's up another 2% today. I mean, this has just been a monster. And we brought it up, 2 weeks ago? March 3rd, 184. And I said, oof, it still hasn't covered this gap down to 150. Well, you know what it has past that 150 gap? Is this gap up here to 317. It starts at 250. I think it's going up to the 2. It's probably going to hit I'd say this mark, 230, 220, and get some pretty good resistance. I don't think that 250 is up there, but BSFC, let's see. Then I got to start the podcast. I didn't want to be on for a long time today. I had to make sure. Delete. I checking my texts. Blue Star Food Corp. Ooh, that's an ugly one, Sherry. They have like bacteria recall or something. Blue Star Foods, they're not making money. They're down 60% year to date. No coverage from monkeys. Strong second half reporting. That's a PR news wire. And that seems to be all they have. So there's no real coverage of them. A bunch of buys in October at 97. Nothing that really would, I mean, that's $1,000, $3,000. Nothing that would tell me, hey, oh my God, these guys are selling a significant bigger amount. John Keeler, the CEO, at $1. You're trading at 15 cents. He's selling it at $1. Mommy. I just forwarded, what was it? If you guys don't know, Lamar Jackson, who is the quarterback of the Baltimore Ravens. He is in contract negotiations with the Ravens, and it's not going all that well. He wants basically Patrick Mahomes style money. Meanwhile, the guy hasn't won a Super Bowl. I don't think he's even won a playoff game. And he's kind of like glass sometimes as he gets older too, because his body takes such a beating. But what you may not know is his mother is his agent. And it's not like she's overly qualified is probably the nice way of putting it. But Goldman Sachs, remember I said at 300 you should buy it. I think it got down to 301. Never hit the under 300 mark. But yeah, you're 316. I think a lot of these banks, let's see, FRC. Let's see if Jim Cramer is right at 930. If FRC, you still don't have a MACD cross up on, by the way. It's at 1550. It's up 27%. Let's look at the 65 minute. I think I said DPST. I think it has a buy. This one still doesn't have a buy on the 65 minute. Let's look at DPST. DPST does not have a buy. It's above the 8-day though. I think it after the candle closes, so at 10:30 it might probably have a buy. But 907, you're up 15%. Today, I'd say $9. If anything under $9 is probably a decent buy on this one. I mean, again, it's a regional bank 3 times levered. I think you're going to 12. So I may put some money into it, but I'm going to start the podcast. Let's look at SPY. SPY on the 65 minute. Look at that gap. 397 from it closed at 397.79. 393. It opened at 397, so it closed at 390. It's going to have a little gap unless it comes back down. By the way, Walmart, surprisingly, I mean, if you didn't know, I think I have it. Yeah, I've got it in the core portfolio. I'm a believer in Walmart. I shop at Walmart every week for my groceries. The buy-in was 136. And if you didn't know, I mean, we're talking billions of dollars of sales from the Walton family just since February 22nd. I mean, about $100 million a day since February 22nd. About $100 million a day. Crazy that, I mean, here's February 22nd. That's where it happened, where they started selling shares. And so ever since, they've been selling shares. They're just selling it to build pools in their backyards. That's it. So I think you're easily back up here at 147. I think that 136 was a gift, an absolute gift. So let's go into SPY. Okay. I'm going to put this up here. That out. I'm going to take that out. Okay. Bum, 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 bum. And I have my, there we go. Okay. Let's start this puppy. If you're here, this is your first time, hit subscribe. Make sure that you hit the like button. And here we go. Ladies and gentlemen, start your engines. Good morning. It's Tuesday, March 21st. I've been playing around for probably about an hour on YouTube. with folks. If you want to know where all the links are and you're just listening in your car, there's a link tree down below. You can find the link to sign up for TrendSpider, which are the charts that I use, which gets you an algorithm. I know I've got a couple of people to follow up with from over the weekend. Please bear with me. I was just bitching on YouTube. I did my taxes last night. I am still unsure why I owe so much in taxes. I made a miscalculation, but again, if I can teach you anything, the entire management of your portfolio, the biggest quote-unquote hack of your portfolio are taxes. Understand what you're paying in taxes. We have a marginal tax rate system here in the U.S. I don't know for the international listeners, which is about 15% of the podcast listeners. I don't know what your tax situation is like. I'm not a tax expert, but understand hacking your taxes is 100% easier than getting a gain in the stock market on a short-term trade. 100% you'll save more money hacking your tax. If you need to hire a tax advisor for 1 year, hire that tax advisor. Get to understand what you're paying in taxes, where your taxes go, and how you can reduce your tax liability. Whether it's real estate, whether it's financial giving. I give Apple stock. And part of the reason I give Apple stock is so my average price for an Apple share, I think, is around $4 or $5 a share. Well, today it's trading for, let's see, 151, 158. So if I give a $4 share of Apple and I donate that share of Apple to a charity, I think recently I donated it to a pet foundation, a couple of shares. It wasn't much. It was, a few $100s. But I donated a couple of shares of Apple. I get to write off $158. Meanwhile, I only paid $4, and I don't need to pay the capital gains. Plus, the charity gets to keep the entire $158. They can sell the stock, they can put it in a portfolio, they can do whatever they want with it, and they don't have to pay taxes on it. So it's a nonprofit. It's a good way to give it, but understand your taxes. And yes, I was hacking my taxes last night, and I didn't do a good job. I essentially made another $25,000 mistake. Could have taken more $25,000 of free money that I wouldn't have had to pay taxes on out of my gains, and I just didn't do it. But yeah, hack your taxes. But all the links are down below. TrendSpider, it allows, all the charting that I use is TrendSpider. Visible phone service, if you're paying more than $30 a month for your phone service, there's a link down below. Visible unlimited service for $30 a month. Simple, easy switch. I ported my number in. I think 40 or 50 other people have ported their number in from me that are friends. I've got a ton of people over to Visible. Use the link down below. You get $20 off your first month. I don't think I put ID Shop in there, but if your company needs badges or printing materials, get ID Shop. Just get ID Shop. It's great. Just go over to their idshop.com. Absolutely 100%. Let's talk about the markets, and let's talk about SPY. I posted one of the cross-ups yesterday, and this is one of those where, boom, I should understand and listen to my own podcast. But this chart, and I posted it in the private Facebook group, which again is linked down below. But I have Dow Jones Industrial, the S&P, and QQQ, and it's just year to date. Well, understand that these indices typically will tend to come together. Whether QQQ is up 15%, the S&P is up 3% year to date, and the Dow Jones is down 2.69%. So it's down. It's at the bottom. One of the cross-ups yesterday was UDOW, an Ultra Pro Dow triple levered ETF. Well, it's up today. It was up yesterday. It is clear that it had to go up. Either QQQ has to come down, the S&P has to come up, and the Dow has to come up, but all of these will converge. Look at the 1 year. When you go to the 1 year, they start converging. See how they start converging? They typically don't trade very far away. The 3 year, you can see the NASDAQ was well extended in January of 2021. So as we started 2022, it had to come down, and slowly it came down, and the Dow outperformed, and now they kind of cinched back up together, and you're seeing the QQQ outperform again. 5-year, same thing. You know, the NASDAQ outperformed, and tech has greatly outperformed the rest of the indices, and the QQQ is heavy tech. So QQQ is outperformed. When we look at SPY, we had this buy-in here at 395. This is on the 4-hour algorithm in TrendSpider. 395 was the buy-in. You're at 397 right now because you kind of went down. You're just hovering. You're using that 200-day as a resistance level. The 200-day right now is at 394. If we continue to stay above 394, you're in for a probably bull run, I would say. A lot of it depends on tomorrow's Fed decision. The Fed decision is whether it goes a quarter point, which is the expected. I think it's 84% of the people polled think they'll go a quarter point. I think the rest of the people think it's 0%. But, you know, again, I've told friends, if he goes to 0%, what don't we know? Meaning the banking system in worse shape than we actually know. Because 2 days before Silicon Valley Bank failed, he was in front of the Senate saying there's no systemic problem in the banking system. Well, if he actually goes to 0 and says there's a problem in the banking system, boom, Senate hearings. So he may be admitting defeat. But, you know, again, SPY on the daily, 394 we've been using. If you look at it on the daily, we've kind of crossed up there. There's no real thing. But if you run the 4-hour, and you look at this 4-hour chart, it is clear. And again, I use the 4-hour in my algorithm. We're using that 200-day as a resistance level. Well, we've broken through it. So I do think that there's an opportunity there. TrendSpider last night posted, and this was their thing. The measured move on this most recent breakout would put the index, the QQQ, around $330. It's $308. If we get to $330, you're talking about quite a bullish move that goes back to August of last year. That was kind of the highs that you're looking at. And that was its first breakout over the 200-day in well over, I'd say, since December? Yeah. So from December to August, you really didn't break over the 200-day, and then all of a sudden in August, you broke to the 200-day, and then 330 was the resistance level. If we get back to 330, it's quite a big move. Now, what do you want to do if you think that the QQQ is going to go back to 330? Well, buy TQQQ, because TQQQ is a triple levered. Now, I will tell you, I am not so sure that we are in for a 330 move all in one shot. And the reason is, when you look at TQQQ or QQQ, the RSI on QQQ on a 4-hour basis is at 66. That's big. You know, people will start selling as that RSI gets higher. So I question it a little bit, but if this is the start of a bull run, I think it's likely. Let's talk about some stocks. ENPH, Enphase Energy. This got an upgrade from Raymond James yesterday. This is one that has been crazy. We don't have a buy-in on the algorithm yet, but it probably will. The MACD looks like it's about to cross up, and you've been done pretty well on the algorithm on this one. The PE is 70. The forward PE is 25. There's no dividend on this. Year to date, you're down 27%. Over 1 year, you're up 6%. This was a huge winner last year. Your 52-week range is between 128 and 339. You are right in the middle of where you are at within that 52-week range. Like I said, Raymond James put a $225 price target on this. It's trading at 192. That'd be a pretty good move. When we look at some of the insiders, you can see from March of last year. March of this year. Sale at 214, 965,000 from a director. Sale at 203, $1.5 million. The big one, the president and CEO, sold at 327. 327, $11 million. So he believes that 327 is probably the top. I mean, that would be my guess. Enphase, again, if 327 back in January, that'd be a big move from 192. Probably a good one. But again, Raymond James upgraded it. Now, banking. Let's talk about Credit Suisse. Credit Suisse is up 1% to 95 cents. Do not touch this stock. Absolutely do not touch this stock. USB, USB Bancorp. No, USB, I forget what the symbol is for USB. UBS, I'm sorry, UBS. UBS Group, AG registered. This is the bank that bought Credit Suisse. This is the one you could probably buy. Probably. I got to sneeze. Excuse me. Sorry. I'm sorry if I blew out your ears. But I gave you a little warning. Sorry, I had to sneeze. UBS. This is one that bought Credit Suisse. They got a gap up. They're just crossing up. This is probably in a healthy, a $22 stock, which is a 10% move. In a super healthy, you're just getting off essentially this one on the chart. You bought it 1856 on December 22nd. You had a 16% move up to about 21.50 or so. It's trading at $20.18 right now. The volume was huge yesterday. You can see that just in the volume chart. FRC, Jim Cramer said he thought it was going to go down at 9:30. Well, little fucker's wrong. It's up at 15:07, up 23% today. It still has not had a crossover. The MACD crossover is probably happening. I would say it's putting in a base at between 14 and 15 on this one. There is a gap between 51 and 69. I don't think you're getting back to that one anytime soon. I'd rather see you trade this one on the 65-minute algorithm. Again, get TrendSpider, and you can have access to both these algorithms. The 65-minute algorithm still doesn't have you in, but it's probably going to get you in the next candle or so. And remember, it's 7 candles per day. I forget. I think it's 7 candles per day. But right now, it doesn't have you in. That MACD is still kind of down there. I would guess that this, in a good market, probably has a $25 price target. But again, if they have a run and if they have a dilution where they just issue more sales, they're talking about things like that to try and raise some money, you could get completely screwed, and this could be a $2 stock. It could be worthless. Because if the FDIC has to take this over like Silicon Valley. Remember, Silicon Valley shareholders got wiped out to zero. Absolute zero. So be careful on this one. So where do you want to go? Well, DPST. I mean, spread your risk, but have it in a 3 times levered ETF. This one doesn't have a buy-in right now. It will on the next candle. You're at $8.96. I was just telling folks on YouTube. In my mind, I think this is a $9 stock. You've got a gap up here starting at 11 that goes all the way to 12.66. I think that's where you're going. I would put a very tight stop loss on this if you're trading it. Trade it on the 65-minute, not the 4-hour. It did get a cross up on the 4-hour, I think yesterday. No, today it's $7.86. It's down to $8.98. If you can get this at below $8.50, I think you're doing pretty well. If you want to buy it below 9, I'd just have maybe a 5% stop loss on it, because I think if you're going to lose 5%, I think it's more likely that you're going to lose 10%, so save that 5% and have a 5% stop loss on it. PACW seems to be one that is holding up really well. This is Pac West. I don't know why. Honest to God, I just don't know why. On a 4-hour, you're gonna have a cross up here at probably 11. If they are to continue and to have a good, I would say the kind of support level is about 15 on this one. So if you want to risk it, you might be willing to do this one. I probably would do this one over FRC. FRC is just a little bit more risky than I think PACW, but do your research. I'm not a perfect, I don't know my stuff on this one. I just look at the charts. Now, one that we talked about that is most likely completely safe is Schwab. Schwab, the CEO, bought $3 million back on Thursday or Friday or Wednesday of last week. I forget. It might have been Wednesday. At $59 a share, you're trading at $58.08. The algorithm finally has a buy-in at $57.17 on this one. These guys aren't going bankrupt. These guys don't have a run on their money. They did need some more liquidity, but they're fine. They've been around for hundreds of years. They're gonna be fine. I don't think that this is a Bear Stearns. I don't think this is a Lehman Brothers. I don't think that Jim Cramer is big on Schwab. He is much bigger on JP Morgan, which isn't going under either, by the way, anytime soon. JP Morgan is actually going to be one that probably backstops it. But anything under 59, I think you're doing fine. And again, it's a long-term buy. This one I would not trade. This one I would just buy and hold. But there you go. UBS, FRC, DPST, PACW, or Schwab. Take your pick. And if you're playing the banking crisis, do that. Alex on Facebook asked me about double levered ETFs, Gush and Drip. I have not gone over these because in the energy sector, I always thought it was best to pick your company. And when I say pick your company, there are major differences between energy companies. And this one just kind of spread it out. And when I looked at our levered ETF list on TrendSpider, it looks like I only picked a couple of sectors. Energy was not one of them because I do scan the energy sector. So I do specifically tell you when specific companies like Occidental Petroleum actually crossed up, Viper Energy, Venom, as I call it, VNOM, crossed up. So I do look at that. Now, if you wanted to trade Gush on the 4-hour chart, it doesn't have a MACD cross up. It's probably crossing up today. There was this gap here between 110 and 114. My guess is if you get up to the 145, you're doing really well. If we look at a long-term chart, just a weekly of Gush, you can see it hasn't been a winner. I mean, it just hasn't been a winner. Even from COVID, you were trading at 17 in COVID. Yeah, you 100 times your money, but it doesn't look like you 100 times your money. It looks like, you got a little bump. That's because it's just been a falling knife. And Drip has been the exact opposite because it's an inverse to the thing. But you're still losing money. If we look at this one, you were in at 1437. You're up at 1577 right now. But if we look at a weekly, because this is a decaying asset, you don't want to own it. And that's why I say in the energy sector, I'm kind of okay with owning the individuals. But if you want to trade it, you can do this one, or you can do my favorites, UCO and SCO. Your boy here lost thousands, tens of thousands of dollars on this one in its heyday around COVID. UCO, you're still not in. It's probably going to cross up today. You got this gap up here between 23 and 24. You're trading at 22.82. I think you probably get back to that. But make no mistake, this is a trade. This isn't a long-term hold. Yes, you're up from where your COVID low was, but long-term, this is a decaying asset. Long-term, you do have this gap here between 42 and 58. Do not expect to get back there. I would be selling this one into the strength. In fact, it's got weakness right now. But you can see the reverse split of 4-1. So rather than Gush and Drip, I'd probably trade, again, this is crude oil. I'd probably trade this one just for the oil thing. But if you want to trade Gush and Drip, just be careful. Make sure you have some tight stop losses on there because, again, it's a triple levered ETF. Do not own that one. You trade it. In the Facebook group, I posted an article, and it was interesting because there were 3 high dividend payers. And I said it's an interesting one because they all pay super, super high dividend. The first one is Verizon. They've got a 6.97% yield on their dividend. The PE is 7, so it's not super high. It's pretty low, in fact. 37.56 is where it's trading. You had a buy in here at 36.88. Their ex-dividend date is on April 6th, and April 20th is their earnings. So, by the way, before I forget it, I never brought this up, but DPST has a 4% dividend, and I believe it was the opening of today is the ex-dividend date. So you missed it. It's a 4% dividend. So those of you that are in DPST, high five, because you got a dividend along with a $9 share price today. But the first one in the article is Verizon. And the article goes over the reasons to own Verizon. I think they print money. Again, Visible service. Verizon owns Visible. So I was literally next to my friend who pays $90 a month to Verizon for his unlimited service. I pay $30 a month. I was getting higher speeds on some speed tests that we were doing side by side. Now he has Android. I have iPhone. I'm long Apple. I'm also long Google, but I'm longer Apple. But Verizon was one. The chart looks good. And if you wanted to buy this one, hey, get in. 36.88 was the buy. I think anything under 35 is a great buy for this one. I think it's a $40 stock. Similar to where I'm holding Cleveland Cliffs at $20 because I think it's a $30 stock, even though right now it's at 18. I'm down on that one, 10%, 15%, somewhere in that neighborhood. But I'm holding it. I'm going to buy more. But Verizon was the first one. The second one was PFLT, which is Pennant Park Floating Rate Capital. I have no freaking clue what these guys do. PFLT. Let's look at their financial asset management. Is a business development company. It seeks to make secondary direct debit, equity, and loan investment. The fund seeks to invest through floating rate loans in private or thinly traded or small market cap public middle market companies. I have no freaking clue what that means. But it's an 11% dividend. So it's all that makes money. It's down 5% year to date. Over 1 year, it's down 18%. It is 52-week range between 943 and 1438. It's 27% off its 52-week high, 10% above its 52-week low. With an 11% dividend, do not expect explosive growth. Absolutely do not expect explosive growth. Ironically, today, the buy-in is 1022. That is where the algorithm has you in. Now, this one, if we look at a long-term chart of this, and I'm looking at a weekly, and we just go back, this one goes all the way back to 2016, and it's trading right around this level in 2016. It trades between, it looks like 14 and 10 during this entire time. I would expect this one, as capital becomes more expensive, to continue in the downward direction. But you're getting an 11% dividend during that time. So PFLT is the second one. The next one is ARLP, which is Alliance Resource Partners. ARLP, let me put it into FinViz. It's coal. And I remember the article now, 14% dividend. ARLP. This one, kind of a falling knife recently. It's gotten a cross up. 1889 is the buy-in. It's trading at 1956. You got a gap up here between 22 and 2220. Might get filled. It's below its 200-day. The article said, hey, coal isn't going anywhere. And while you've got this, here's the thing that you have to know. The PE is only 4. The 14% dividend, you're down year to date 3%. Over 1 year, you're up 36%. You're kind of right in the middle of your 52-week range between 14 and 27. If you're paying a 14% dividend, you're not putting money back in the business. So your PE is going to be lower, and you're not going to be able to pay back. You're basically paying all your money out to shareholders. Now, pre-COVID, this was trading right where it is today. COVID came, dropped it down to 2020, dropped it down to $2 a share. So you've 10 times your money if you bought it at the COVID low. But you've seen that rise. It's just back to where it was. They're selling coal, probably to China, huge coal users. So ARLP, Verizon, PFLT, and ARLP. Those are the three. The other thing that I wanted to do today was take a look at spider sectors. And I will not go over all of these, but I will give you the spider sectors, and the list is down below if you don't catch this. But it is XLC, and these are the ones that are in buys. XLC, here's the chart. The buy-in was 53.84. This is the communication services. XLP, which is the consumer staples. This is in. It got a buy-in at 71.65. You're at 72.66. XLV, which is the healthcare. We went over how healthcare has just been beaten down. This one had a recent cross up at 125.07. You're at 127. The 200 days up here at 132. Healthcare sector's just been beaten down. We went over it yesterday. XLK, which is the technology, which has not been beaten down. This one is still in a buy, but your RSI is super, super high. It's at 66. XLK buy-in was at 138. You're at 144. So it's probably not a buy right now. XLU, which is utilities. This one, another beaten down segment under its 200-day. The buy-in was at 65. You're trading at 66. And XLY, which is consumer discretionary. I have this one particularly in our core portfolio because I expected it to do really well this year. Back in December, it was at 129. It did really well and got up to 152 with a 12% gain on the algorithm. Right now, the buy-in was at 139. You're trading at 144. You're right at the 200-day. I expect this one to kind of hang around the 200-day, so I don't think it's a huge one. The next ones that are not buys currently, but might be soon, is XLE, which is the energy sector. Energy has been beaten down, absolutely beaten down over the past couple of months. And it doesn't have a buy, but the MACD is about to cross over. So you're probably going to get a buy here at 80. I don't know if you'll make money, but you'll get the buy-in at 80. XLF, the financials. This is doesn't have a buy. Again, this doesn't have a buy, but the MACD is kind of crossing over and is crossing over low. You're at 31.96. The 200-day is at 34. This is the banking crisis. 100% the banking crisis that has taken this down. So you can invest in that if you think that the banks are coming back. XLI, which is the industrial sector under the 200-day. It's probably going to cross up here at about, you're trading at 99. I think anything under 100, you're fine on that one. XLB, which is the material sector. I was just looking at Rio Tinto, where we were trying to buy it under 50, and it's trading at 66 right now. That would have been a great buy. But the material sector is kind of having a bounce back. It's under the 200-day. It uses that 200-day, and you could trade this one. You're not going to make a ton of money. Your average win on this one is 6%. The actual algorithm on material sector, again, XLB, the algorithm over 2 years makes you 22% if you get in and out using the algorithm. The actual asset only makes you 0.33. So you're doing well with the algorithm on that one. And finally, XLRE. I would rather see you play DRN and DRV. XLRE just traditionally, I mean, if we look at this one and we go back to a weekly, I just don't think it's returned what you want it to return. I mean, you go back to 2016, if you've been holding this, 2016, you were trading in 30, and you're 36 today. So you've only made 20% in what? For 7 years? Now, get the hell out of here. Trade DRV and DRN. Those are the ones that you want to buy. I'll give you an example of like XLY. You take this one back to 2016. We'll go back to weekly. So we go back to 2016 and you were trading at 70. You're trading at 144 today. That's consumer discretionary versus real estate. So again, it matters what sectors you're in, what stocks you're holding, and what you're looking to do. But if you're just looking at 7 years over XLRE versus the XLY has doubled. So consumer discretionary. Now, if you want to talk about XLK, the technology sector since 2016. Let's look at that one. Because again, it matters where you're putting your money. We go back to weekly and we go back to 2016. And 2016, this was trading at 38. 38. XLK is at 144. So what's that? 7 times your money? No. 5 times your money. Something like that. Your boy doesn't do math, especially with taxes. But it matters. Where you're putting your money matters. So let's go over some scans. I'll put all of that's in the notes if you want to look at those, which sectors are in, which sectors are out. But again, it's on a 4-hour algorithm and it changes. I'm just looking, if you're looking at buying a stock, look at some stock where, again, it's in a sector where that is actually doing well. If a sector is not doing well over the long term, maybe you don't want to get into that stock. You don't want to hold it. You want to trade it. Scans, Occidental Petroleum, buy in at 58.98. You're trading at 60.45. Anything under 60, buy it. Anything over 60, you can sell it. Boeing, they sold their Dreamliners. It's up 1% to 207. I've said something around 200 is probably a better buy. This has a buy-in at 203. Again, it's at 206. I think it's a $220 stock. Boeing's a good one. I think I bought at 220 with the weekly stock pick, which again is this week is Microsoft. Venom or Viper, VNOM. I always call it Venom. 27.40 is the buy-in. What I want to warn you about is this is kind of a hype. Viper Energy, and this is an energy company with a PE of 13, a forward PE of 16. They have a dividend of 3.65. Year to date, it's down 11%. So you're pretty much right in the middle of your 52-week range. It does have a cross up below its 200 days. So I don't want to scare you away from this one. It might be a $30 stock, which is kind of where the 200-day is trading. But it has had a pretty good move here from about 25 to 27, which again isn't a huge move, but it's enough to make some money. And we talked about NXE yesterday, NextEra Energy, Next Gen. This one had a buy-in at $3.70. You're trading at $3.78. Energy seems to be back. Now, some of the levered ETFs, HIBL, BOIL. This one had a buy-in at 26.88. This is an S&P high beta bull 3 times of the S&P. You're up 5% today at 28. So 26.88 was the buy-in. Today you're at 28. It had a buy-in yesterday. If you have after hours, you could have bought in the after hours. URTY. I think, isn't that like a Cypress Hill song or something? URTY is the Ultra Pro Russell 2000. 34.88 is the cross up. It is up 6% at 37.24 today. URTY. UMDD. Ultra Pro Mid Cap 400. This one had a cross up at 16.63. You're trading at 17.50. You're up 5% today. And we talked about DPST. This one had a cross up at 8.78, I think. 7.86. 7.86. You're at 8.81. You're down from where we were this morning at about $9. Again, I kind of expect this one to continue to fly. Now let's talk about I am going to list these down below. I'm not going to show the charts. I'm going to list these down below. But we had 1, 2, 3, 4, 5, 6, 7, 8, 9 Vanguard low-cost ETFs that had cross-ups on the 4-hour algorithm. 9 of them. VEA, VTV, VNQ, VXUS, VYM, VWO, VBK, VB, and VO. Those are all symbols. I'll have them listed down below. They all have entries. I do not trade those. I look for entries. I look for solid placement of those. So understand that the Vanguards are just tools. They are long-term buys. Let's talk about some of the S&P and some of the other ones. Marriott International, MAR, just kind of dipped under its 200-day. 163 is the buy. It's trading at 167. Their next catalyst is May 2nd, which is their earnings. The MACD is kind of, the last time it was trading, when the MACD was down here, it was at 148. We got a 15% buy in the algorithm. So 15% gain. Another travel one, Sabre, SABR. These are the guys that do the software for the travel industry. $3.91 was the buy. You're up 6% today to $4.16. Their next catalyst is May 1st for earnings. This RSI was way down around 27. Today it's at 39. My guess is that you get back up here to 519, which kind of puts in a shelf. You do have a gap up here between 625 and 686. You could get back up there. This gap was filled on the way down, so it really doesn't have too much of a magnet. But I would guess that 484 to 506 probably provides some resistance and in that gap. But SABR. And because I was in Airbnb, I got to tell you, I love that freaking app. I really do. I mean, when you can rent it with the click of a button and your host is good, you get good reviews, you get good, good. I think it's grown into itself. I hate cleaning fees. I hate the fact that you have to pay these cleaning fees. I hate that I have to, strip the beds. This particular Airbnb, we didn't have to strip the beds. We didn't have to put the laundry in. We didn't have to do anything other than take the trash out. And the only reason we had to take the trash out is they didn't want bugs. That's it. And they have bears. So they want the bear to break into the bear box instead of breaking into the house for food. So, again, 117.62. In my mind, I think anything under 150 on this one is a pretty good buy. It's kind of like Snowflake. Snowflake, sometimes you buy it above 150 and you wind up going down to 120. What's Snowflake at right now? Snowflake is at 136. So sometimes you buy it over 150. It goes down, you just buy a little bit more. I think Airbnb is similar to that. It's enough of a mainstay in our society that I don't think it's going anywhere. Another travel name, Booking.com, BKNG, Booking Holdings, I guess, is what it's called. It had a cross up here at 2,493.73. You're close to its 52-week highs here, so I would be a little bit, you're 3% below your 52-week high. The P is 32. It's a little bit expensive. Year to date, it's up 26%. Over 1 year, it's up 16%. Their forward P is only 15. So if they continue to grow like they have been, if we're heading into a recession, could be a problem. MCHP, which is Microchip Technologies. Actually, I'm just going to read these off. This is one that had a buy-in here at 82.31. 83.42 is where it is. I don't know anything about the damn company. It just came up. CSX, which is, I think, is the railroad company. This one has tipped down. 29.21 was the buy-in. You're trading at 29.44. If you want to take advantage of this one, I think you're getting it at a pretty good price. But again, you have to worry about kind of the regulation, kind of the cost, Ross stores. When has anybody been in a Ross store where there hasn't been crap all over the floor? They're finally getting to cover this gap. The gap goes down to 97.33. The cross-up is a 102. You're trading at 104. I'd kind of be a little bit careful of this one. But 102.15 is the buy-in. Lululemon. I talked about this one yesterday. I thought, we had a cross-up here at 292. It has another cross-up. Kind of went down. The algorithm didn't get you out. But we had another cross-up. The RSI is at 54. I say anything under 300, buy that one. I think you're doing pretty well. And again, Warner Brothers, we had kind of the cross-up as well. WBD, same kind of situation as Lulu. You just have a cross-up. 14.26 is the buy-in. You're up at 14.62. The MACD is kind of in no man's land, and the RSI is at 52, which is no man's land too. Your next catalyst are the earnings April 24th. So nothing real exciting. But today I would play the DPST. I think DPST, buy into Schwab. If you think that the Qs are going, buy into the Qs. You're looking at a pretty good day up. You're looking at the looks like the Dow. I got to look it up. I think Active Trader Pro is not winding up. But most of the core portfolio is way up. Bank of America is up 4%. Devon is up 3%. Goldman Sachs is up 2%. Meta, which has just been a monster, is up over 200. MPLX is up 1%. Oxy is up 2% over 60. QCLN, which has been doing okay, up 2%. Qualcomm up 2% at 124. Roblox, which has just been a monster, is up 2% at $44. Remember when this was trading at $28? And I said, we want to get into that one because I think it's a $30 stock. Well, it completely blew my mind. The most recent buy in the algorithm was $39.56, and you're up at 44.29. So you've easily made your 10% there. Shopify's at 44. I said anything close to 40 was a buy-in on this one. 39.56 was the algorithm buy. Let me wait till it finishes. But Shopify, 41.31 was the buy. When it got under 40 at 39.02 on March 2nd, that was probably the buy. Back here on March 13th, it dipped down to 39.79. You're at 44. I think it's going to come to fill this gap between 46 and 52. I'm a big believer in Shopify. Target, it's even today, but it's at 163. I think it's going to that 250. We talk about it all the time. I think it's between 170. There's a gap up here which has been filled. The gap here to 212. I think that one gets filled at some point in time this year. Tesla is up 3%. They got an upgrade from their junk status to corporate status or something like that. XLY, like we talked about, up 1%. Exxon is up 3%. So you've got opportunities in this market. Again, tomorrow is the Fed decision. We'll know that at about 2 o'clock. Kathy Woods is on CNBC. Her ARK is up 2%. It's under $40. I think you can buy it under $40. I don't own any of the ARKs anymore. I own a good amount of their core portfolio. I don't own Roku, don't own Tesla, so I probably shouldn't even say that. What am I saying? Okay, sponsors. Visible Service is if you're paying anything more than $30 a month for your phone service. Again, the link is down below. TrendSpider, sign up for a 25% discount using the code DSP25. You'll get access to my 4-hour algorithm, the 65-minute algorithm, all of the lists that I have, all of the scans that I have, anything that you want in TrendSpider, I'll absolutely help you set up. And ID Shop. I just found out I'm going to Chicago and to Houston in April for a week around Easter. So I don't know where I'm going to be, but I think the month of April I'm on the road quite a bit. So get me while you can. Subscribe to the YouTube. Again, if you're not subscribed to the YouTube channel, please just go over and subscribe to the YouTube channel. If you made it 42 minutes into this podcast, you like me. You really, really like me. So just jump over there. You can get to see my daily hairstyle when I roll out of bed and do this show. But again, just subscribe. I'm looking for more subscribers over there. I have tens of thousands of listeners to the podcast that probably listen in your car. Aren't you interested to see what I look like? Maybe not. No, nobody's excited about that. But just go over and subscribe to the YouTube. Again, the link tree is down below. If you make money, if I got you into DPST, if I got you into any of these banks, the tip is absolutely appreciated. I do this completely gratis. I get some money from the ads, complete disclosure. I think it's less than 30 cents an episode. So I do this out of the kindness of my heart. Think of me as a bartender. If I turned you on to something and you made money, just tip me like you would a bartender. I will lose you money in the future. I guarantee you of that. Anybody that says they will not lose you money absolutely is 100% lying through their teeth. There will be times where I am wrong. I am wrong a lot. I'm also right a lot. Like I said, the Dow Jones, UDOW, that's just, let's see where UDOW is. We can look up the chart here. UDOW was a cross up from yesterday, and the cross up happened at $50.36. Right now you're trading up at 52. So you made what? 4 or 5%? Not a bad, up Dow. Ultra Pro Dow 30. It's only for 30 stocks. So your 200 days at 57. That'd probably be where I would think, if you get to 55, I'd probably think about taking some profits. It's a good 10% in this one. But the MACD is still down. The only thing that would worry me about buying in at 52 right now would be that the RSI is up at 50. I mean, that's no man's land. So that's the only thing that would worry about me. But when I look at this chart that says that the Dow has to come up year to date in order to meet the NASDAQ and the S&P, I kind of think... you're down 2% on the Dow and you're in an upward trend. The others are in upward trend as well. So I would kind of think that you'd be okay. But Again, do your own research. So have a great day. I will talk to you tomorrow. Export song to disk. 44 minutes. Yeah, Christian, I completely agree. And you know what else? Warren Buffett says it's a great buy. WBD is I don't own it yet, and I'm slightly scared to get into it because they aren't making money. And Zasloff, I've worked with Zasloff before. Not directly, not in a way that... are we going to have a DC versus Marvel? I think both outlive, from a general market perspective, I think both become commoditized. That's my take on it. But WBD, I think 1426, I think is a great price. The other one that I've always said, under $300 for Netflix, I think that's a great buy. The buy was at 301.82, but you could get it under at about 285 back here, March 13th. I have to put that on. You know what? I'm going to put that on. Oh, I didn't bring up Schwab. Shit, that was my big one. Oh, I did bring up Schwab in the beginning. Let's see. We're going to do title. Netflix. I'll do tomorrow. I will do Netflix versus WBD. Because I do think when you look at... Here, let's take this. And we'll do a charting of Netflix, and we'll add comparison. We'll take out the S&P, but we'll put in WBD. And what's Paramount? Paramount Global. There we go. We'll put those in. This is the killer. I mean, look at year to date. Paramount's up 20%. WBD is up 52%. Netflix is only up 3% year to date. You go 1 year, it's completely reversed. Netflix is down 18%, but WBD and Paramount are down like 43 and 44. So it's completely flipped. I think I went over HUBC. Isn't that the one that's just too new? Yeah, you don't have any candles on it. And I couldn't find it, AJ. I'd love to look it up for you. From a chart perspective, I got no moving averages other than the 9 and the 21. So, and I don't think that Hub Security, let's see. Yeah, there's nothing. I think it's a hype play. I think you trade it. But it doesn't have, I mean, look at this. Back in February, this was a $10 stock. It's at $1.93. They're hosting an event on March 28th. I think it's a hype play. They're not making money. Earnings per share this year down 392%. Year to date down 84%. I'd rather put my money in First Republic and bet that they're going to actually do something. I think you have a better chance there. But I should say this. I think you have a better chance of not losing everything in First Republic. Whereas Hub Cybersecurity, I think you're in danger of losing everything. Just because look at the total revenue. In 2020, total revenue was $112 million. It's only $103 million. Cost of revenue was going down slightly. Gross profit down year over year. They're selling general and administrative up because they have to pay higher salaries. Research and development up significant, 18 times up on your research and development. Just from an operating perspective, nah. I mean, diluted earnings per share, you're losing 55 cents, whereas 2020 you were making 18 cents. Yeah, it's a hype one, AJ. So it's new, so it's probably just got some growing pains. Okay, I can see some updated here. Is DPST moving? Kathy Woods she's a great economist. She knows what she's doing. There we go. Okay, I think I kicked it into gear there. Yeah, but here's what I know about Christian. I would say if you're likening the streamers to Apple versus Google on the phone, I think Netflix is Apple. I think the rest of them are Google. Meaning, Netflix just works. Netflix, when I want to go and watch something and I don't know what to watch, Netflix guides me to what I want to watch. And it does it really well. Apple TV does not. I have a Chromecast that I'm going to start using on the road when I travel this year. Instead of taking an Apple TV with me, I'm going to take a Chromecast, because if I leave a Chromecast behind, it's what, $20? If I leave an Apple TV behind, that's like $100. And your boy has some Alzheimer's issues sometimes, where I forget to pack stuff, especially when I'm in a hotel. Ooh, SMMT. Sherry, man, I'm making you your groceries this year. New episode, create an episode, browse, podcast, 321. There we go. Which transition should I do today? I think I did 3 stories yesterday. Walking shoes. No, I don't like that one. West. That one. Rodney Scopes. Pedal rider. Okay, that's a good one. We'll do 184. And then we'll insert an ad. Larry. Here, let's look at FRC. DPST is at 877. That one's kind of falling ever since 930. Let's look at FRC. I don't think that my Active Trader Pro is actually updating effectively. FRC at 1595. I think if you get in, I mean, shit. I kind of agree with you, Larry. The problem you have with FRC, here's my thoughts on FRC. They're not saying what they're going to do. And so they need to raise capital. So Jamie Dimon, I'm afraid, will probably say, let's do a capital raise and issue some stock. Because JP Morgan can make a shit ton of money by advising them to do that. I don't think that they're going to take on the debt that FRC has. But, Jim Cramer right about here at about, I think it was 7 a.m., where it was trading at $13.75, said, do not put your money in here. It's going to go down. It's going to lose everything, blah, blah, blah. So right now you're up $3 a share, which is what? 40% up from where he said that. He's just a douche. Where is my... There we go. Save episode. We're going to go over here. Kathy Woods is so fucking smart. And I got to tell you, that woman... Christian. Hold on one second. With that comment, my dog started crying. What's wrong? Are you okay? Are you okay? Oh, look at your belly. Look at your belly. I know why you're crying. Why are you crying? Look at that belly. Let me finish this. And we'll do something here, okay? Promise. Bless you, bless you, bless you. Farewell. Okay. She took your bed, so you're screaming at her. My one dog. Such a wimp. Good for you, Sherry. Let me see. Do. Daisy. Okay, I'll put you under. Here you go. My one dog is 12 pounds, and the little 8-pounder pushes her around and bullies her. Three. Update. We'll put in the notes. Okay. Publish now. Oh, you know what? I'm not going to share it from here. I'm going to share it from Spotify. Let's just share it. We'll just share it and we'll put it out there. I don't think Twitter gets me any real benefit. And we'll put this one. I'm going to remember to It doesn't put the damn picture up anymore. We're going to take that out. BOIL, I can go over BOIL, SOXL. Oh, I got that one. BAC, AMD. I gotta get 2 out. Tweet. There we go. We'll just do those 2. Okay, and now it's 10:40. We have our second. Let me see something real quick before I switch you back over. Energy, I think energy and healthcare, Larry. I'm looking at. Wow, there's a big difference between what the app tells me and what. Here, I'll switch you back over here. Larry, you may have joined late, but here, look at XLE. XLE is beaten down. And it's not beaten down over a long-term stretch because last year it was in such a bull run. You can look at a weekly. I mean, you've just broken that triangle. Over the weekly at 200 days at 58. I think 80 is a good kind of back and forth, if you will. And I lose viewers left and right when I say I'm going. But I'd be careful with energy, and the only reason I say that is if we are going through a recession or a pullback, energy is going to take one on the chin. I think China coercing with Russia, energy kind of comes into play there. I think geopolitical politics has a problem with energy as well, but I agree with you. I mean, here, Exxon for me is $120 stock. I think that's, it bounces off of 117. I think under 100, Exxon is a great buy. CVX, I think anything around 150 is a great buy for Chevron. I think they're just going to return a ton of capital to shareholders. I think they're going to buy a ton of stock back, which is going to make the stock even more valuable. I think now that the banks are failing, I think it's taken the pressure off of the big oil companies. He loosened up drilling in the Arctic. I think those are the two companies that kind of take some benefit. I think ConocoPhillips actually is the one that has the basin, but that doesn't return it for like 10 years. So you can kind of look at this around under 100. It's probably going back up to 110, 120. But in the meantime, ConocoPhillips and Chevron and Exxon, they got a huge dividend. ConocoPhillips has a 5% dividend. Year to date is down 16%. Everybody downgraded it to about $100, $140. The average price target is still $134. You can see buys all at 100. February 17th, all at 100. Now, it's not a ton of money. The guy spent, $1 million, just under $2 million bucks. But I like energy too. And FRC just continues to go, by the way. FRC is on a freaking tear. FRC is we were looking at it and it was at 1590. It's up at almost 17. Its high today was 1710. I think you're blowing that out today. Jim Cramer said it's going down. There's some kind of news in the market. Oh, and I am going to go. I'm going to take the dogs for a walk. I'm going to get my day going. I will talk to you guys tomorrow. Have a great day, you guys. Yeah, I think you're fine. Again, I'm holding my Devon. I'm holding my my Chevron. I'm holding my Exxon. I'm holding my MPLX. I mean, just, I have MPLX in our core portfolio. It's not a well-known stock, but look at how it's held up. I mean, this one puts off an 8% dividend while holding here between 30 and 35. I just think you're crazy if you don't get this one around 30 and just hold on to it. I mean, I don't need a ton. If I'm getting let me see, is it an 8% dividend? Yeah, 9.19. What do I care if it trades between 30 and 35 in a year? I don't care. Should buy more when it's at 30. And this one, by the way, just so you're aware, continued to pay their dividend through the pandemic. So look at it monthly. This is the pandemic. This was COVID. A 43% 1 month. You went down to $6.86. I bought it here at about $10. I've added to it. I've sold some, so I don't have a $10 price price per share. But I think my average price per share is like $25. And I've just bought a ton because I get a 9% dividend. I'm happy with a 9% dividend. So, yeah. Okay. Tomorrow I'm going to go over Netflix versus WBD versus Para. We'll look at the three. We'll look at all three if you want to put money into streaming. First Republic is going over 17 again. Yeah. Oh, this is what I was looking at, by the way, with MPLX. I don't think I showed you guys. But MPLX, this is the monthly. What do I care? Even before the pandemic, it was up here around 31 to 35. It's just gotten back there. Do I care if I kind of just leave it here? No. As long as it stays in this and continues to pay a 10% dividend, I'm perfectly happy. So